All right, let's jump straight into another deep dive. This time, we're tackling the U.S. market week, June 17th to 21st, 2025. And looking ahead, too, last week saw some, well, significant volatility, a lot of caution tied to geopolitics. It feels crucial to unpack that.
Absolutely. Our mission today is really to boil it down for you find the most important takeaways. We'll connect the dots, from those big market swings and surprising sector moves, all the way to economic signals, the Fed's latest thinking, and even some big news in digital assets.
Okay, so let's start with the indexes. It felt like a roller coaster, but the final numbers were, well, pretty muted, right?
Yeah.
The Dow Jones gained just 0.08%, S&P 500 dipped a tiny 0.22%, and the Nasdaq actually edged up 0.21%. How does that work?
Yeah, it's a bit deceptive. That muted finish hides a lot of churn during the week.
Yeah.
And that choppiness, that volatility was explicitly tied to the rising tensions in the Middle East.
Yeah.
Geopolitical caution was the name of the game. Investors were jumpy, reacting to headlines day by day rather than taking big positions. So lots of noise, not much net change by Friday.
Right, and those geopolitical ripples definitely showed up in specific sectors, a real split. You had oil and defense stocks climbing like Valero Energy up 3%, Lockheed Martin almost 3% higher. Makes sense. But then airlines got hammered. United down over 6%, Delta over 4%, higher fuel, travel worries. Pretty clear link there.
Yeah, that direct impact is clear. But what was maybe even more dramatic was the solar sector, just a massive sell-off. Envis Energy down 24%, Sunrun plunged 40%.
40%? Wow.
Exactly. And this wasn't just vague market fear. It was tied directly to a specific policy proposal, a Senate budget idea about removing tax credits for solar. It's just a stark reminder of policy risk, isn't it?
It really is. Shows how vulnerable even growth areas can be to shifts in Washington. But interestingly, amidst all that turmoil, AI-related stocks seem pretty resilient. We saw Jabil jump almost 9% on strong AI demand. CrowdStrike gained over 2.5% after an AI announcement for AWS customers.
AI continues to be a powerful narrative, driving real investment. It's seen as almost a separate engine for growth right now. And look at SoftBank, the big Japanese investment firm. They sold a big chunk of their T-Mobile stake,
Causing T-Mobile stock to slide about 4%, yeah.
Right. And their stated reason: to free up cash for AI investments. That's a major strategic shift, moving capital from mature telecom into AI.
That's a big signal.
Oh.
Okay, so beyond the stocks, what about the broader economy? What signals were we getting? Felt like signs of moderation, maybe? Retail sales were weaker, down 0.9% in May. Housing starts fell quite a bit, 9.8%.
Yeah, and jobless claims were up to 245,000. That's the fifth highest reading since back in August 2023. Plus, the leading economic index kept pointing downwards. So, yeah, the data definitely suggests things are cooling off a bit.
Which brings us to the Fed. They met on June 18th, held rates steady, right? 4.25% to 4.5%.
Correct. No change there. But the interesting part was, in their projections, they still see 2 rate cuts likely for 2025, which is sort of the base case now. But their forecast for 2026 points to inflation staying higher for longer, and they specifically mentioned tariffs.
Ah, the tariff impact. So Chair Powell said they still have a cutting bias, but expect tariffs to push inflation higher later this year. How do those two things fit together?
It's a balancing act, isn't it? It seems they're signaling they might tolerate a bit more inflation, maybe inflation driven by external factors like tariffs, if it means they can still support economic growth and eventually get to those rate cuts. It's a nuanced message, higher for longer, but still leaning towards easing eventually.
Okay, that makes sense. A tricky path to walk.
Yeah.
Now, switching gears a bit while all this was happening, there was some pretty significant news in the digital asset world, wasn't there, beyond the M&A surge we saw in May?
Yes, a landmark development, really. The Senate passed the Genius Act, that's the stablecoin regulation bill, and it passed with strong bipartisan support, 68-30. That's quite something.
What does it actually do?
The core thing is it mandates strict reserves. Stablecoins have to be backed one-to-one by U.S. currency or short-term treasury bills, real assets. This brings a lot more structure and, frankly, legitimacy. Analysts are now talking about the stablecoin market potentially growing from maybe $250 billion now to possibly $2 trillion by late 2028.
Wow, $2 trillion. That's huge growth potential,
Right.
driven by regulation.
It really signals mainstreaming and risk reduction for that part of the crypto space, a very big deal.
Okay, so looking ahead to this coming week, June 24th to 28th, what should people be watching? We've got more economic data, the final read on Q1 GDP, plus May personal income and spending, and earnings from some big names, FedEx, Micron, Nike. Those could move markets.
Definitely keep an eye on those. But I'd also highlight Chair Powell's testimony to Congress, his semi-annual appearance. That's going to be key for getting more clarity on the Fed's path, especially how they're thinking about those tariffs and the inflation outlook. And of course, the background noise. Geopolitical risks, domestic policy uncertainty that's likely to keep volatility bubbling away. So, wrapping it up, the market feels like it's still in a bit of a wait and see mode. Cautious, external shocks, policy decisions, these things are really driving the bus right now, causing some pretty big shifts under the surface.
Yeah, it really hammers home the point, doesn't it? When a potential change to a tax credit can send a whole sector plunging overnight, or when the Fed is trying to balance growth against inflation possibly stoked by tariffs. It forces you to ask, how do you adapt? How do you read these signals when policy and geopolitics are so intertwined with the economy? It's a fascinating and challenging time.